What's up, guys? Steven Dux here. Today we're gonna talk about momentum shift. The two stocks we want to talk about is LINU and RTMB for past week and a half, and this is a really hot patterns for this couple of days. Um, they are they have the similar patterns, and once you recognize the weakness, you can make a decent money on the downside, and you can also make money on the upside as well. And let's start with RTMB. As last video, I talked about the momentum, decent momentum, and when you try to short this heavy volume traded stock, it's hard to judge when is the momentum is going to shift. So by the stock habits, every single morning it's going to have a squeeze. So when the stock repeats itself 2 times, on the third time it's most likely to do the same thing again, especially for consistently couple days. So on August 21st, if you see a morning spike, come back down, morning spike, came back down. Now on the third day, okay, typically when you see the two days that did the same thing, on the third day, spikes it to almost $3. So for this kind of momentum, when the stock repeats its 2 morning spikes and 2 morning squeezes at the same time, on the third day, try not to short this before the market open. It's a potential dip buy because stock is likely to behave what it's going to do early on. So same thing the fourth time. So when stock repeats the same move over and over again, then you have to adapt it to the stock as well. And once the morning spiked, every single morning spiked failed pretty hardcore. So this one failed as well. So to be able to trade on August 21st to August 25th, just try to adapt to the momentum. So August 1st morning spike, August 2nd morning spike, August 23rd morning spike. So I typically participate in the third day when you try to do the same thing again and again. So I know it's going to morning spike because it did twice. High odds of winning, so I dip bought, shorted. Stock behaves very similar for the past couple days. Now, after the third time, I'm down shorting or buying, and I'm going to keep watch the patterns to see if the momentum switch or not, or the pattern behaves differently. So on the fourth day, morning spike did not change, and I know spike doesn't hold, so shorted again, and that's where you know what the stock is going to behave like. Just you can take advantage on the downside or the upside as well. So now on the fifth day, the stock is morning spiking in the morning. So you know the stock never holds its morning spike. So shorting to morning spike, came back down again. So this is something you can actually pay attention to when you're trading those kind of momentum stocks. Watch the previous 2 days how they behave, and it's most likely to do the same thing on the third day. So 2 examples on 21st, 22nd, 23rd is the third example, and you replace the third example into the first one. So 23rd will be the first example, 24th will be the second example, and 25th it's going to repeat what did it for the past 2 days. So easy predictable patterns, but try to keep keep close eye on watch the previous 2 days. And on the 25th, you can use this third example replace to the first example. So morning spike fail, okay, and you had a huge gap down in the pre-market. Same thing, stock selecting morning spike. If it spikes, now when it opens, morning spike, fail again. And predictable patterns, stock never holds its morning spike. Second day, when the stock is spiking in the pre-market, I do count as a morning spike. So if the stock already morning spiked in the pre-market, once the market opens, it doesn't need to have a morning spike anymore because already morning spiked in the pre-market. So pre-market spikes replace the morning spike. That's what I typically do. So shorting the morning spike again, and because the stock doesn't hold morning spikes, you can just take that one advantage and shorting into mean resistance over and over again. And for RTMB, it can make you a lot of money on the downside and on the upside, because what exactly the stock is going to behave for a couple of days. And on LNU, same thing. Very hot patterns for past couple of days. And you did a big morning spike to the 250, come back down, morning spike again, come back down. So this is a little bit different than RTMB. Now if you draw a horizontal line right here, you can clear see where the support is and where the resistance is. The support is at 190 to 192-ish. The resistance is around 250-ish. When the stock behaves twice in 2 days, it's typically going to behave in the third day. But on the third day, the stock did not morning spike. It turned around in about 10:30 and tried to spike again. Now the little bit difference is on the August 30th, typically in the afternoon, and the stock did not fade in the afternoon, but actually tried to bounce it back to almost to the main resistance level. And you can clearly see 184 is the clear dip. So on the first day, it clearly hold 184, 185 as a dip as well. So for LNU, when the stock behaves twice for 2 days, and the third day is going to behave the same thing. But what happens if the stock panicked? And most people will believe the stock will do the same thing. And what do you think what they will do? They will dip by the dip and hoping for a delayed spike. That's what exactly LNU did on August 31st. It dipped down to 180 because you always try to buy before the support area. So if the support is 180, you try to buy at 185. If the support is 185, you try to buy at 180. That's how it dipped to 190 and expected to main resistance level. Now I didn't short this spike because it hit to mean resistance level, because I don't want it to form a couple handle on me, which is a super bullish sign, and you never know how much shorts are stuck in this LNU. So this trigger will be very, very dangerous for me. I'm not comfortable pulling this trigger because the the squeeze was not far enough, and you might can squeeze further to break 250 and do like a couple of handle squeeze above $3. So when the stock squeeze it to the same resistance level for previous couple days, especially not under it at the same resistance. So if the resistance is 250 and squeeze it to 250, I wouldn't short there because it's too much of short squeeze. But if the stock for previous couple days is 250 but it squeezed it to 230, you know people are shorting this before the main resistance area, and the squeeze was not that strong. It didn't test the top of the resistance level. So if it's under it, I'm pretty comfortable to short a little bit underneath of resistance. But if they are the same exactly level, typically I won't take a short. So that's just my personal personal method. I don't like to take bigger risk. So as you can see, August 31st went up to 250 and dipped down to 193. So same thing, landed on the same support level. So when people try to dip buy, and when the clearly support fail, it will cause a morning panic. So for RTNB, LINU, stock typically behaves 3 days. So the one day you can take advantage on is the third day. First time behave, second time behave. So you know what the stock is going to do in the third day. On RTNB as well. So take advantage on August 23rd. Take advantage on August 25th. And you can take the advantage on August 31st. So for I think on Tuesday when the stock market opens, you know when the support breaks become a solid resistance. So 183 will become the resistance for LINU, and LINU will go down further, maybe to the 150 to test this bottom on Tuesday. That's just my thoughts. It's not a pattern, but it's actually a pattern. Let the pattern show itself and take advantage after the stock shows you what kind of pattern it is. Then you can take advantage from there. It just in stock market history always repeated by itself. So and people still thinking the same way. If the stock repeat twice, it's not always, but I would say 70% of the chance it will going to repeat in the next day or in the next month. So that's why when stock has so many failed spike before in the history, that's why stock doesn't hold spikes that very well, because people see the history. So keep that in mind. And next one I'm going to talk about DRYS. Very, very simple strategy. Stock had the bad news. I think it's they're issuing 100 million shares at 275, and the stock tanked all the way to 210. Bounced. First thing, the stock market, nothing goes straight up, nothing goes straight down. If it goes straight up, it's going to have a pullback. If it goes straight down, it's going to have a bounce. And when DRYS bounced, because DRYS went straight down, so it bounced to almost 280, and I picked the entry at 280 because I do want to risk a round number to short into the main resistance area. you look at the 1 month chart, 2 minute, the entire mean resistance is around $3. So shorting in $3, very, very good risk reward. I'm risking 20 cents to make potentially 50 cents or 60 cents. Once it takes out that 3-ish level, and this 3 area becomes a huge resistance, I don't think stock can break 1 month resistance in 1 day. So that's just typically how stock behaves. And I picked the entry at 280, shorted into it, covered most of it at 260-ish. And on the next day, it actually was a great short again because the stock is holding at 270 level. So basically, if you short here, you're risking 30 cents to make a potential 30, 50, actually 50 cents. So not bad risk reward, solid resistance. Shorting into resistance is always a good strategy. And for this kind of multi-month, actually multi-weeks resistance, typically it's hard to break that in one intraday. So keep that in mind. And those are the 2 patterns I need to go over with. Maybe next couple of weeks those patterns will happen again, and make sure take advantage on the 3rd day when the stock repeats its own pattern. So it's very predictable, and just make sure position your size correctly. Never go too big, and it's never worth it to go broke on one stocks. So same thing as DRYS. If you typically this is not for low flow stocks. It's a little bit for mid cap. So if stock has a bad news, bounce right back to multi-month or multi-year, multi-weeks resistance, and it's a pretty solid risk reward strategy. Most of the time, I would say 75% of the chance that stock pulls back after the big bounces. So that's the lesson for today, and I will see you guys next week.